Hi everyone, welcome back to the channel. Today we're breaking down some of the most important changes coming to Universal Credit, UC, and Personal Independence Payment, PIP, from the Department for Work and Pensions, or DWP, this April. For millions of people across the UK, these benefits are a crucial part of their financial support, so it's super important to stay up to date on any changes. These changes will impact a wide range of people, so whether you're someone already receiving Universal Credit or PIP or you're planning to apply soon, this video is for you. I'll also cover everything you need to know about the new rules, what's changing, and how these changes could impact your payments. So grab a cuppa and let's get started. Alright, before we dive into the specifics, let's first take a look at what the DWP is actually doing here. From April, they're introducing a set of major changes that affect both Universal Credit and PIP. And I mean major. These changes are all part of the government's ongoing efforts to improve the benefits system, streamline processes, and, importantly, adjust to the cost of living crisis we've all been feeling in recent months. You may have already heard whispers about this, but trust me, today we're going into detail. These updates will affect both current claimants and future applicants, so it's critical that you understand how it will impact you. But, don't worry, I'm going to break it down step by step so it's easy to digest. Let's start with Universal Credit, UC. Now, Universal Credit is a benefit paid to people who are either unemployed, on a low income, or unable to work due to health conditions. It's been one of the key support systems during the pandemic, and it's evolved quite a bit over the years. But what's changing come April? Well, first up, there's a big shift in the way your earnings are assessed. Starting in April, the DWP will be increasing the monthly earnings threshold for Universal Credit. This means if you're earning more than you were before, you might notice a difference in your monthly payment. And here's the key, for some people, this change could actually mean a higher benefit entitlement. But for others, if you're earning more, your payments could decrease because the system will now take more of your income into account. What does that mean in real terms? Well, let's say you're working a part-time job but still relying on UC to top up your income. Under the new rules, the amount the DWP takes off your Universal Credit will be recalculated. They are aiming to encourage more people to take on extra hours or improve their earning capacity without immediately losing their benefits. This could be a game changer for some, more support when you're earning more rather than the system pushing you off the benefits entirely. There's also going to be an adjustment in how many hours you'll need to work before your UC payment starts to decrease. Currently, the system might cut you off after a certain threshold, but under these new changes, there will be a more gradual tapering off. This is good news for those in flexible or part-time work who were previously cut off too quickly. However, there's a caveat. If you've been receiving Universal Credit because of your low income or because you're unable to work full-time due to health reasons, these changes could create some uncertainty. And speaking of that, there's also a huge change regarding the UC taper rate. For those of you unfamiliar with the term, the taper rate is essentially the percentage of your income that gets taken off your Universal Credit payment as you start earning more. Currently, the taper rate is at 63%, which means for every £1 you earn above a certain threshold, you lose 63p of your UC payment. From April, the taper rate is set to drop to 55%. Now, this doesn't sound like a lot at first, but in practical terms, it could mean more money in your pocket. For example, if you earn £100 above the threshold, you would lose £63 under the old system. With the new taper rate, you would only lose £55. That's an extra £8 in your pocket for every £100 you earn above the threshold. While it may not seem massive on the surface, for low-income workers, this small change could make a big difference over time. The government says that this change is part of a broader push to make work pay more effectively. But here's the thing, you've got to stay on top of your own circumstances because there will be different thresholds depending on whether you're a single claimant, part of a couple, or have children. Alright, now let's talk about Personal Independence Payments, or PIP. This is another huge part of the benefits system, designed to support people who have long-term health conditions or disabilities. The goal is to help with extra costs related to these conditions. So, what's changing for PIP claimants starting in April? First and foremost, there are new eligibility criteria. As of April, the DWP will be revisiting how they assess whether you qualify for PIP. They're introducing a stricter disability test, meaning you'll have to demonstrate a higher level of impairment than before in order to receive the same rate of support. If you're already receiving PIP, this could mean a reassessment of your current claim. This could be a bit worrying for some claimants. The DWP says this change is aimed at ensuring that PIP is only being given to those who need it the most, but it has raised concerns about people who are already struggling with severe conditions. People with conditions that fluctuate or are less visibly obvious may find this reassessment to be difficult to navigate. Another key change for PIP claimants is that the DWP will now be using more digital tools to assess your eligibility. They are moving a lot of the assessment process online, which could make it easier to apply or report changes to your condition. But the digital shift could also leave people who are not as tech-savvy, or those with less internet access, at a disadvantage. So, how will all of these changes affect you? Well, it depends on your individual circumstances. If you're someone who's been receiving universal credit or PIP for a while, there's a good chance you'll see a change in your payment amount, either an increase or a decrease, depending on your earnings or health situation. For example, if you're currently on universal credit and you're earning a bit more, you could actually see your payment stay higher, thanks to the reduced taper rate. But if you've been on a low income and you don't work much, the system could now gradually reduce your payments as you start to earn more. For those receiving PIP, you could be asked to prove your condition has worsened or changed in order to keep your current rate of benefits. Now, while the idea behind these changes is to create a fairer, more streamlined system, there's definitely some concern about people who may end up worse off, especially those with fluctuating or hidden conditions. It's essential that you stay on top of any letters or updates from the DWP, as they'll be contacting claimants who are impacted by these changes in the coming months. So, what can you do to prepare for these changes? Well, the first thing is to make sure all of your information with the DWP is up to date. If you've had any changes in your health or employment situation, it's important to report those immediately. This will ensure that the DWP has the most accurate picture of your situation when they reassess your eligibility for benefits. Second, if you're worried about how the changes will affect your payments, don't hesitate to get in touch with the DWP. You can always ask for clarification on how these new rules will apply to you specifically. And lastly, keep track of your own earnings and health situation so that when the DWP contacts you, you'll be prepared. To sum up, the changes to universal credit and PIP in April could mean more money for some people, while others may face a reassessment of their claims. As always, it's important to stay informed and keep on top of any correspondence from the DWP to avoid any surprises. I know this can all be a lot to process, but don't worry, I'm here to keep you updated on all the latest news. If you've got any questions or concerns, drop them in the comments below, and I'll do my best to help out. Thanks so much for watching. If you found this video helpful, make sure to give it a thumbs up and subscribe to the channel for more updates like this. Until next time, stay safe, stay informed, and take care.